This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back to the Research Talks podcast on Stockbox with Alan Green. Alan, how are you at the end of another week?
The end of another week, COVID-free, and it's a bit of a grey one, but I think the weather's getting better for this week, and I think the outlook is a little better. Anyway, that's what the app on my mobile phone tells me, so it must be right.
Well, yeah, it must be right. Yeah. Sometimes you can get a better forecast by just looking out the window, I think, particularly in the UK.
But, certainly, yeah.
But
as we know, April in the UK, and it's 4 seasons in one day. In fact, 4 seasons even in one morning sometimes.
Indeed. Yeah, indeed. Well, I'm pleased that everyone's COVID-free. That's nice to hear. And the snow from last week in the Netherlands is gone. It only lasted about a day. So, yes, hopefully getting up to some slightly nicer weather as well. So looking forward to the weekend. So today you're going to talk to us about Panther Metals, who, of course, had some significant news just yesterday.
They did.
And then also Technology Minerals. So Panther Metals first, Alan?
Panther Metals first, indeed, yes. So of course, Mark, we have spoken about Panther Metals on numerous occasions beforehand, and of course, Chief Executive Darren Hazelwood is well known across Stockbox media channels, and he's very prolific on Twitter, and also just a very good line in explaining geological anomalies using parking cones and Darren
stolen parking cones.
Yes, he's very good at that. But I think it's sometimes using props like that to help explain something really works well, and actually what he did went down very well with that particular clip. So Panther Metals have gold, copper, and nickel interests in both, and cobalt interests in both Australia and, of course, in Canada, and there have been a raft of developments at both ends of the project, but looking at the Australian assets first, a number of assets have been packaged up and put into Panther Metals Australia, and of course this happened last year. Currently, Panther Metals UK, of course, Epico PALM, own 36.6% of that, and with the company, of course, is now ASX listed and is developing the range of assets that the company has, which are a range of gold assets. But the primary focus for the group at the moment is on the Coglia asset, which is in Western Australia. And Coglia was previously discovered quantities of cobalt. That some work that was done a couple of years ago identified cobalt in the region, and along with several other projects around the area, the team moved in there, did some sampling on the ground. Magnetic surveys were undertaken, and an idea of the size of the asset was put together. So the team have been drilling at Coglia to in a mood to establish a maiden resource estimate there, and the most recent developments there at Coglia. In February, the company reported that it had the 5 holes that were drilled. 3 of the 5 holes drilled had returned above average. When I say above average, significantly in excess of the expected range of mineral returns for nickel and of course cobalt. Darren said of that work that it was an encouraging start for the team in targeting a maiden nickel and cobalt resource, but also as the work had progressed, new mineralization had emerged outside the existing footprint, which of course gives new and exciting upside to the opportunity. Then on March the 23rd, the company reported further assay results, and hole 32, for example, 21 meters at 1.34% nickel, including a 12-meter stretch at 1.87% nickel, and 8 meters with 833 million parts per million of cobalt. So highly significant. Some other notable numbers: hole 6 was 12 meters at just over 1% nickel, and 5 meters at 1,800 parts per million of cobalt. So, very significant numbers, and the team will be very encouraged with that as they develop and progress the asset. So that if you like summarizes the primary assets for the group in Australia. There are also a series of gold projects which I'm not going to go into details of, but of course we have the Mongolia Gold Project, the Annabaru and Marikai Gold projects. These are sort of projects that will be developed once the work at Coglia is completed. So we then moved to the Canada asset, and the group have or Panther have been engaged in the Hemlo-Schreiber Gold Belt, which of course is on the north coast of Lake Superior. A number of companies that, of course, that are within the group of companies we work with, Mark, that are working in the area, but in particular. Panther have been working on the Big Bear project, which of course is a major part of the asset, and the Dotted Lake project also. Before last year, of course, the move into the Abonga Greenstone Belt, which is a VMS, a volcanogenic massive sulfide that was discovered at the Wishbone project. And in January this year, of course, Panther reported that the drill holes there showed a detailed target delineation, and the nature of the target and the nature of the discovery meant that the Panther concluded that these VMSs, the volcanogenic massive sulfides, are found in clusters. And given the way they have been, given the way they've emerged in discovery, Panther is specifying many more, and of course there's a very good base metal content across the discoveries made to date. So that, of course, has been has progressed through the year. Going back to, I mentioned the Big Bear project. Just to bring us right up to date on that, the Panther announced yesterday that it had decided to sell the Big Bear project to Fulcrum, which is a company seeking an initial public offering on the AIM market, and Fulcrum have. Fulcrum will be basically operating and developing the Big Bear project. Through this, Panther will get 20% of the issued share capital when the company comes to market, which is that's a very strong deal indeed. It's in many ways it mimics the sort of IPO spin-offs that Power Metal are undertaking, of course, with Gold Metal Resources and for FDR in Australia. So it receives 20% of the issue share capital plus a £200,000 sterling cash payment, and going forward 2% of net smelter royalties. So that's really that. It's a great way for, and this is where we see the really good junior resource companies making progress as they decide that they can focus their activities better on certain assets in the portfolio. Spin off the other assets into an IPO, generate cash to keep the company going without having to further raise money and dilute shareholders. However, as we know that the company did raise money on March the 7th. It's raised 360,000 sterling at 8p. I know Darren is meticulous, and his primary concern is that they minimise dilution, but a lot of the fundraising that has been undertaken by Panther gets spun straight into buying assets. So in a sense, the value of the company grows. So there is no dilution per se. And indeed, that is the case because, of course, on March the 22nd, going back to the Bonga Greenstone Belt, Panther announced that it had secured a further remaining 13 claims at the Awkward East asset. And Awkward, fantastic name for a mining asset, but Panther already owned the assets to the west of the anomaly. 13 claims east of Awkward really covered what they refer to in geological terms as the plumbing conduit, i.e., when the geology formed the shape of the ground, the shape of the ground, and the minerals within the ground, the minerals, if you like, bled through and created a plumbing system. So once these are identified through surveys and sampling and so on, then of course you can identify the assets. So what it effectively means, through that acquisition, Panther now have coverage of the entire Awkward East plumbing conduit. This was formerly owned, of course, by Noronex Limited, which is an ASX listed company, and early work there has already indicated plenty of platinum and palladium samples at the surface. So it's a very, very exciting asset indeed. So as the company progresses in Canada, going back to the Dotted Lake asset that the company owns, and this of course is closer to Big Bear. Dotted Lake is of course up on the Hemlo Schreiber gold belt. Through the work that's been undertaken there, they've identified a 1.3 kilometers long gold anomaly with widely dispersed mineralization. The drilling team intersected 4 anomalies, or they intersected 4 gold samples above 1 grams per ton. Of course, that's the benchmark. Companies will report findings above 1 gram per ton. That's considered significant in early discovery works. And these 4 intersections were made between 47 meters and 158 meters down. And Darren said, of course, it's very encouraging given the wider context of the Hemlo region, and we know there is a massive amount of work taking place there. Of course, you've got the Barrick Hemlo gold mine, and works are being undertaken around the existing mine territory to expand the reach and create new additions to the asset. And of course, Dotted Lake is very much on the periphery of those activities. So, in summary, across these projects, both in Australia, there's significant progress underway. We've got a mineral resource estimate at Coglia for cobalt and nickel, of course, key battery metals. That's going to be very exciting once that's developed. We know, of course, there's a huge shortage. There's going to be a huge supply squeeze in battery metals coming up, particularly now with the Ukraine crisis. You've got huge mineral supply or mineral resources in Russia that have simply been cut out of the equation. So it's increased the urgency for new supplies to be discovered and located. And of course, that's where sort of quality assets like Coglia come in. It could see it fast tracked on the back of the Russia-Ukraine crisis. Then, of course, in Canada, we have the developments at the Bonga Greenstone Belt. Of course, the Awkward plumbing conduit now looks like a major asset in the Panther Metals armory. The company's well funded. Of course, it's paid for the additional licenses now at Awkward with the fundraising, and of course, the latest news yesterday. It has sold the the Big Bear asset to Fulcrum Canada, and the latest. The latest development, also announced yesterday, of course, it's used some of the monies raised as an option sale and purchase agreement with Sheer Gold Exploration, incorporating the West Limb and Glass Reef gold properties at an area called the Kenora. It's in the Eagle Manitou Lakes Greenstone Belt in the Kenora Gold District. This is some 300 kilometers east of the Thunder Bay area in northwest Ontario, and of course it's Sheer Gold Exploration are working in the area, so it has an option sale and purchase agreement executed now with that company, adding further value to the Panther Metal, the Panther Metals asset portfolio. Just looking at the share price performance of Panther, of course. We've seen that tail off during 2021, which is quite typical of junior mining companies in the sector. It's just the malaise that we're seeing in Panther hasn't been immune to it, but a very strong bounce back over the past week on the news of the development at Orchid East, and of course the sale agreement to Fulcrum Canada, where it's set to receive 200,000 cash, as I say, and of course the share gold option. We've seen the shares pop back up, and indeed today they're trading back over 10p, 10.7p, and of course this is that's certainly at a premium to the placing that took place at where it raised £360,000 at 8p to fund the acquisition of Sheer and of course the additional licenses at Orchid East. So Panther is set for a very exciting year.
Good, thank you for that, Alan. And of course, the CEO, Darren Hazelwood, quite a respected CEO, isn't he? Amongst investors, very aligned with shareholders, very prudent with money, very respectful of how the money is spent and what goes into the ground. I spoke to him yesterday, and he said, this opportunity with the Manitou Lakes area shouldn't exist anymore. With the cycle about to kick, and he really felt very strongly, which I would agree with. The cycle is really due to do its upswing fairly soon, and to pick that up for it's approximately 15,000, I think, in total. He said is a song, and where it is, and what's the saying in Canada? The best place to find a mine is in the eye shot of a head frame, something like that, and surrounded by other mines, and I think some of the licensed areas was sold recently for sort of 7 million to a new company called Dryden Gold Corps. So, and Panther Metals have picked up licensed areas right in that area. So Darren's not going to do that because it just for no reason. He I think everything he's doing with moving on Big Bear as well. Still have exposure to that through the share for the listing in Fulcrum that is due. He's aligning everything for the benefit of himself and shareholders. And I think it's obvious that's what he's doing. He's a good guy.
I think, of course, Darren is very much poacher turned gamekeeper, isn't he? He was formerly an investor into the space, and then moved into the space and became stepped up as chief executive for Panther. So it's quite unique, really, the investment proposition, because and Paul Johnson is very much of the same mold. They're investors into companies, understand the investment process, and know what they'd like to see. So they're now running companies and ensuring that the retail investors that get involved are able to see very clearly what's going on with the company. There's very good visibility, in terms of the development and the steps the company are taking to develop the assets they have, but also in terms of dilution for shareholders. I mean, I think Darren is that's one thing. I know I met with him last year, and we had a long chat, and that was one thing he said he was absolutely firm on. The dilution is is something that he will not advocate in any way, shape, or form, unless it's to if it's the money's been directly raised and spun into another asset, so the value of the company increases, and the the valuation either stays the same or increases. And I think, as we've seen already with this move, we've seen the share price now at well over 10p, as against the 8p the 360,000 was raised at back in March. So that's good management.
Yeah.
Good management in a
Very good
difficult
management. Yeah.
environment currently for small cap resource companies. But as you say, and I firmly believe this too. I think we're going to see a real snapback this year, as the discounted prices of small cap mining and resource companies address the valuation gap to the price of commodities. It simply has to happen, and with the supply squeeze that is well documented and will create some serious challenges in the next few years for the new clean tech and EV industry. This is where companies with quality assets like Panther and Coglia will be sitting pretty.
Yeah, indeed. And just on the raising there, I think it's unusual as well to see a company who just raises money what they need and when they need it, rather than going for big raises. And pay themselves big salaries, for example, or whatever else, and feel you've got a good cash runway that you can not necessarily waste it, but when you feel you've got a lot of money, it's easier to kind of not count the pennies, whereas Darren definitely
he does.
counts the pennies.
He counts
sure,
the pennies
and
the number of shares that he has to issue when that money's raised too, so they can calculate the dilution, communicate the upside in the asset acquisition, as they've done, of course, as Darren did, of course, yesterday with the sheer gold assets, and of course the additional Awkward East license acquisitions, and you can see clear added value there, which offsets the increase in the number of shares in issue.
Yeah, good. Okay, well, the next company then,
Technology Minerals. Yep, of course, we have spoken to we've spoken about Technology Minerals this year, and this is the Technology Minerals listed in London late last year, end of November, citing themselves as the first UK listed sustainable circular economy company for battery metals, very much in line with guidance at COP26. Technology Minerals has achieved this through a portfolio of battery metal assets. These are mining assets that the company will be developing, and also a battery recycling business that's built into the company. Just to say a bit on the management team, of course, the chairman is Robin Brundle, and of course Robin Brundle is very well known, sort of in the automotive sector. Obviously, his brother Martin Brundle is Formula One driver, and Robin himself is also engaged in motorsport. Very much a serial entrepreneur as well. Has developed many businesses and built them and sold them on. Alex Stanbury, chief executive, mining resource expert. Also been working in the city for many years with several investment banks. And the company have just made two recent appointments as well. They appointed James Hannon as Chief Finance Officer. That was announced a week ago. James is former GMP Securities, Hayward Securities, PricewaterhouseCooper, Old Mutual, Grant Thornton, and he's he's also an IPO advisor on AIM-TSX and ASX companies. So he has a prodigious a portfolio of activities that are very much dovetail into what Technology Minerals are working on developing. And then a few days prior to that, they appointed Matthew Taylor as the Group Managing Director for the Recyclers business. Matthew is former general manager at leading aerospace metals group, which he during his tenure he grew revenues by 40% and improved margins 100%. And prior to that, he was a consultant at Smith Kenyon and a board member at Cummins Power. So again, a great addition to the team. So on the battery metal mining assets, first of all, the company has announced the acquisition of the Blackbird Creek asset in Idaho. It's exercised its option to agree this and added 158 contiguous load claims and a further 3,000 plus acres to its existing land, which is based alongside the Jervois Mining Idaho cobalt mine, which is operational later this year and will be the first cobalt mine to start up in the US for many years. The sampling that's been undertaken there already shows high levels of cobalt and also copper. So very encouraging from the team there, and we'll know more about that as we go forward. There are several other assets in Idaho too, which the company will be developing. There are 5 exploration permits in Cameroon. Early reconnaissance has been conducted there and is prospective for nickel and cobalt. Then, of course, we have the Astamet assets in Spain, in particular the Aramo mine at Astamet, and sampling or due diligence work that was undertaken. It was announced on March the 14th. 79 samples, including 53 at the underground from the Arrow mine, showed high grades of copper, cobalt, and nickel. So very highly prospective for development there. And then we go to Ireland, and there is just close to Wicklow in Dublin, 15 prospective licenses covering just under 500 square kilometres. Prospective for lithium and other metals. So there's a package of some 20 to 25 million sterling assets there, which are under development, and we'll have further news on the mining work at those assets later on this year. So that's the mining part of the business. The other half of the business, of course, as I said, is Recyclus. And Recyclus is the first UK company with an industrial capability to recycle and repurpose batteries on an industrial scale. And this is, of course, lithium-ion batteries and lead-acid batteries. And the materials that are extracted from this recycling process are worth a surprising amount of money in the market. Recycled lead, for instance, is worth over £1,000 per ton. The plastics from that worth £262 per ton. Acid, £80 per ton. And then what's referred to as the black mass, which are the battery metals that are extracted from the lithium-ion recycling process, are worth just under £5,000 per ton. So there's real value here in what the company does. There are 2 plants in the Midlands which the company have been working on and developing to open, and the company, the equipment has now arrived at the plant, is undergoing final testing and validation, and I'm sure we'll hear about those coming on stream in the not too distant future. The company also, Technology Minerals, when it came to market, provided a series of financial forecasts based on the income from the recycling business, and of course the value of the mines, and forecast some £9.5 million turnover in the first year with a small loss of 300,000. Interesting to note that although the full year results were delayed, there have been no changes to those forecasts, and that could be on the back of the partnership and takeoff agreements that the company has worked on. Indeed, the first development in that regard was with Slicker Recycling, where the company has an agreement, Recyclers has an agreement with Slicker Recycling to recycle many thousands of tons of batteries over the year, and through the development of the recycling plants. Recyclers has very much aligned the process with values of companies such as Tesla to accelerate sustainable transport and renewable energy offerings. In this regard, it's produced a blueprint for the process along with WMG Engineering, that's at Warwick University, where it has a partnership, and there are a number of videos the company has released which explain the process very well, and those can be seen both on the Technology Minerals website and also on the Brand Communications website under the Technology Minerals company page. So that really brings the company up to date. We're going to, of course, have further news on the recycling centres in the coming weeks. I've no doubt. Just to say as well that the company broker Arden published a broker note on the group. This was back in March, and Arden said that the Technology Minerals continues to have a high level of positive news flow, rating the stock as a buy with a 7p price target. And of course, this is based on the value of the mining assets that I've outlined, and of course the values and the cash flow that's going to be generated from the recycling centres, both at Tipton in the Midlands and Wolverhampton when they come on stream later on this year. So yeah, a very exciting year in prospect for TM1.
Okay, so you said 9.5 million forecast from the battery
That's right. Yeah,
recycling
turnover.
side of it.
That's for year one. Year two,
Wow.
they're forecasting 28.5 million, with a profit of just over 5 million. Year three, 55 million turnover, with a profit of 15.2 million, and
Okay.
so on. So,
And when is year one
well, year
starting?
one, the financial numbers for the full year, we're already in year one now. So that's
So,
yeah, that's right.
yeah, so effectively this year.
We're in the current year now. So yeah, that's it.
Okay. So yeah, okay. So it's an operation that is up and running and
Yes,
generating revenue.
it will be generating revenue once the plant is open and on stream. They're just going through the final validation process, which of course will be very shortly. Okay. But as I say, what is interesting to note is that although the full year results have been delayed, the company made an announcement to that effect a week ago. It's not made any changes to its forecast for the cash flow from the recyclers business, and that's highly significant in my book. And I think we're going to see, given the mandate that Technology Minerals set out when it came to market last year, I think the company's got ambitions to certainly expand the business and build the business not only in the UK but further afield. So it'll be interesting to see those developments as and when they take place.
Okay, excellent. Well, that certainly seems like the initial catalyst, doesn't it? Get that over the line and get some revenue coming in, pretty significant revenue at the same time. And yeah, you're right. You could see a repositioning of the share price, and you've got the blue sky potential of the exploration.
Well, that's the great thing. Well. It's this. The business is it's a circular economy business. So of course, it covers the entire life cycle. The minerals come out of the ground, go into the batteries, and then at the end of their life, they're recycled, reprocessed. Hence the term circular economy. But certainly the stock and the value proposition has resonated with investors. I mean, the shares are currently trading at just over 3p, which has been a real floor for the share price. But they've already popped up as high as 5.5p on the year, and I'm sure once we see the recycling centres open and processing, then we're going to be pushing higher still.
Great. Well, thank you very much, Alan, for giving us the update there on the investment case for Panther Metals and Technology Minerals. And I wish you a very pleasant weekend. If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stopboxmedia.com. Thank you for watching.